Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We've been coming to you live from the Nasdaq PHLX options trading floor. Joining me for this segment is Steve O. He's the head of ETF listings and business development at Nasdaq. Thanks, Steve, again for joining me on Trade Talks to wrap up the week. Let's talk about you as a manager of the Nasdaq ETF listings business. Why do you follow what happens in the options market closely?
Sure. Well, in my world, having options is always a good thing. But
yes, part of the pun.
But to stick to topic, we all know that the ETF space has been growing very quickly, and it's been a remarkable growth story. And ETF options are as well. So we did a segment or a hit in OIC Florida where we talked about the growth of ETF options, and they've been going step in step with ETF growth as well. And why? Very simple. ETF users who used to use option strategies on single company stocks, they want to have some of those same strategies for ETF investments as well.
What are some of the ways that investors can use ETF options?
Sure, I'd say there's two main areas. Some of the traditional ways I'd say is yield generation in a low yield environment. Bond yields are low, volatility can be low at times, and so having these options are great. And then the second area is around downside protection. We saw the recent volatility in February. You see spikes in volatility from time to time. So having put strategies or even collar strategies can help with managing the risk of portfolios.
This is a question I know you get a lot. Can ETF options users, can they still get good liquidity even if that particular ETF volume is low?
Sure. So great question. And I'm going to get a little bit nerdy on you and your audience. So bear with me.
We love nerdiness.
Awesome. So if you think about a single company stock, let's say, for example, a pharma stock, you take one stock and depending on some sort of patent, let's say, that gets approved or not approved, you can see significant price variations because of news like this. Well, an ETF is a diversified portfolio. So it acts more like, call it like an index or a diversified portfolio of securities. So you don't have what are called like idiosyncratic single stock risk. It'd be more like market risk. And the market risk tends to show that you don't have these crazy one-day moves based upon news. And so the market makers who make the markets on these ETF options know that. They actually feel, even if the ETF option isn't active, they know that the risk they take on for providing liquidity on an ETF option is very different and less risky from a single company stock.
So what are the headwinds that are in the growing ETF space?
Sure, I'd say a couple. I think the first one is prevalent in most of our industry, which is around education. Education, there's a lot of news around risk and issues out there. And I think that a lot of investors, would like more education, to better understand what they're investing in and what their risks are. So I'd say the first one is education. The second one is a little bit more technical, and it deals with risk-weighted assets around the way, let's say, that financing is charged for options market makers to provide liquidity. So if we can, let's say, help better regulation and lower the cost for market makers to make risk positions for ETF options and options, that they can provide liquidity, good liquidity for more products.
All right. Well, thank you very much for joining us. We had a double dose of you today. Thanks very much for spending time with me. And thank you for joining me throughout the day. I'm Jill Malandrino, global markets reporter at Nasdaq.